I'm Marilla Fernandez. Welcome to Market Call. Bruce Murray with us on the show today. He's CEO and CIO at Murray Wealth Group and takes your questions today on global equities. Here is how to reach us. Toll free, 1-855-326-6266. You can also send an email to us, marketcall@bnnbloomberg.ca. Bruce, thanks for coming in. Appreciate that.
You're welcome.
It seems to be a quieter day on the markets. Of course, we're only halfway through the day, so there's that caveat. Do you think we're through the worst of it at this point?
We are through the worst of it. It may go lower, but it's going to be.
It may stay lower.
Well, no, it's good. I have recommended to our clients to gradually accumulate on the rate, across the next few months. We're at the bottom. How long is the bottom? Have we seen the bottom? Maybe, maybe not. But we're close. Trump's behavior it's not predictable, but it is predictable in a longer term sense. That he makes all kinds of noise and then settles for something that's quite reasonable. We saw that with Canada, with USMCA. Everything's back. We're all good on 99% of the stuff we send. This morning, you probably saw Alcoa put out a statement saying it's stupid to have tariffs on Canadian aluminum.
They've lost millions of dollars.
Yeah, and the United States shouldn't produce aluminum. They should have data centers or something with their electricity instead of electricity costs 10 cents a kilowatt hour. The stuff falling off this, the Canadian Shield, they didn't have any other use for it, so making aluminum made sense. So
let me ask you. You said you're telling your investors to buy a little here and there. I'm just wondering if your investors, how would you describe their mood? And are you basically saying ignore the noise, dip in, and while you can?
Yeah, I mean, our investors, we had a small number. Want to take assets out of the market earlier, and correctly they did. But over my experience, it's been time in the market, not time out of the market, because you've got to make two decisions. You've got to make a decision to get out, and then when to get back in. And normally, if you made a decision to get out and you're right, I'm going to be even more right if it's going to go down and you miss the bottom. So, I mean, it's a difficult call.
There are recession concerns here as well as in the U.S.
Yes.
What do you see happening?
Well, our income fund is yielding 6.5%. So if we have a recession, yields are going down, and you'll make money investing in high dividend paying stocks that are like banks and insurance companies that are not particularly vulnerable to a recession in the short term. Is
that what you're asking investors to take a look at this point? Because
that's one of the things I'd encourage. Yes. And new investors coming in who are cautious, I would recommend that strategy. Versus, you'll make more money over 5 years going after the big global growth stocks, but we don't know over the next 6 months.
Yeah, and a lot of people do want to get into tech. They see it, as you say, bottoming out. They want to get in, wondering if it's going to go back up. So we'll probably take some of those questions today.
Yep.
But we are going to take a quick break to line up your phone calls. We're back with Bruce Murray, CEO and CIO at Murray Wealth Group. We're back in a moment. Welcome back to Market Call. We are going straight to your emails. Larry had a question. He says, could I get Bruce's thoughts on Pfizer, and do you still own it? What's your take on Pfizer?
Yeah, we bought Pfizer a little bit early. I mean, historically, Pfizer was a $40 stock, and then during the pandemic, their COVID vaccines, they made a lot of money. The stock went to 60, and all of a sudden one day it's selling at 37. I thought, it's got a nice yield. We'll start accumulating it. And they've had a failure on a couple of drugs that are the future. They've got a huge research program. They will find new drugs. And right now, the dividend yield on Pfizer is, I think it's close to 7 to 8%. And I think that's just an outstanding thing to accumulate, because sometime in the next 2 to 3, 5 years, next week, they'll announce they've got a very successful drug, and the stock will pop $10 to $12.
So it's worth keeping around just for the dividend.
Yeah. It's one of the world's classiest drug companies. So it's it will do fine someday in the future. But
You stick with it. Okay, let's go to the phone lines then. Elliot is on the line from Hamilton, Ontario. Hi, Elliot.
Good afternoon. Please, with the volatility in the markets, one would think that helps TMX Group. What do you see going forward? And would you start a position today or wait for a pullback? Thank you.
Interesting.
Yeah. Well, as you can see by the chart, TMX Group has been one of the companies in Canada that has done very well and consistently does well. So it's, I think it's popped up here. You might wait for a day to pop down, but I think it's a decent company to buy if you're prepared to hold on for 5-6 years.
What is that little bit of a dip we saw, I guess, either end of March or start of April?
Well, it probably was Trump tariffs, just
Okay.
a big, everybody panicked over everything, so yeah.
So everything came down.
Yeah,
Okay,
yeah.
let's go back to an email. This one is from a viewer named Ash. He says, what are your thoughts on TFI International?
So TFI is a company that the Canadian investment really loved. The company did real well for 10, 12 years, maybe even more. And then the trucking business in the U.S. started to come down. Earnings have fallen from the $8 to $10 range down to $5. The community, the investment community, the analysts still have great faith in TFI. It's got great management, and they're looking to spin off, I believe, their non-truckload trucking business. And but with what's happening to China right now, like I've heard, 100 planes a day for Temu. There used to be 100 planes a day carry stuff over, and it would all get put in trucks and distributed. And so there's some turmoil right now. But I think if you're prepared to buy and hold it, it'd be fine to buy in here.
Are they going to be affected by the future concerns about the trade war and things going back and forth across the border that way?
Yeah, somewhat. But I mean, eventually we're going to be trucking goods. It doesn't matter where they come from. So it'll come back at some point in time. But just, I think the short-term dislocation is huge.
Do you think that this uncertainty will get locked down within a year, and because people are concerned he's got a 4-year term, right?
Yeah.
Is he going to be done blowing up trade and move on to something else? Do you think that's sort of the way to look at it?
Well, we've seen it when he can actually sit down with the country and come to a deal that he is happy with, which in many cases isn't that far off where we were to begin with, like with Canada. It's yes, I think these deals will come down. China is the tough one, because China is possibly looking to be the U.S.'s replacement as a world leader in, a couple of generations, and maybe they're going to get tougher. They don't have a public to.
Push back on them?
They're not a democracy, yeah. So there's not a pushback, yeah.
There aren't going to be protests in the streets.
So it can be, my ego is bigger than yours, and between Xi and Trump, and see what happens.
What do you think of this? The fact that both of them are essentially saying, we're not going to blame. China has made sort of signs to say we're open to negotiation or discussions. Do you see that being fruitful?
And Trump is saying Xi's a great guy. So
but he says it all the time.
Yeah,
right?
they're going to go have a discussion, and something is going to come out that's going to satisfy everybody, or at least let them verbally satisfy their communities that listen to them.
And you think China will be the only sort of remainder at the end of all of this shaking?
Well, I think China is the most important one, yes, because I mean, we can sit down with Europe and come to deals and things like that, so I think China's the big exporter in the world too at the same time. So yes,
there has been discussion or suggestion that Xi Jinping is going to create a bloc around the U.S. Right, work with other countries to sort of blockade the U.S. or at least fight back together. Do you see that happening? Do you see him being successful at that?
No. I mean, just as Trump Canada was going to cut the United States out. We can't cut the United States out. 25% of our GDP is.
But that does,
export.
right? There are other countries that. Could.
But it's just. Well, China can't either. I mean, the U.S. is a big customer. You don't. If
they're just too big to turn your back on.
Yeah. Well, I mean, they're twice the size of China's GDP right now. It's material. Okay. You just can't ignore the biggest player in the business.
And because China's so big, I'm just wondering, you don't see the other Asian players who have also been targeted by Donald Trump perhaps joining that line?
Well, I think they're scared. They're more scared of China than they are of the United States. So, yeah, I don't see them joining that. Yeah.
Got it. Okay. We are going to take a quick break. Bruce Murray, CIO at Murray Wealth Group, taking your questions today on global equities. We're back in a moment. Welcome back to Market Call. Bruce Murray with us today to take your questions. First, we have an email we'd like to take care of. So this one says, hi, Bruce. I would appreciate your opinion on Propel Holdings. Propel.
Okay, well, so interesting. I first met Propel doing the morning show on BNN one, and they were
How many years ago?
About 2 or 3.
Okay.
And stock was $8. They're an impressive management team. They're very aggressive, and it's lending money to low-income people who banks and other things aren't going to lend, and well, even 3 years ago, they were starting to use artificial intelligence to evaluate the quality of people and try and pick stuff out that a bank wouldn't. And so the stock did fabulously, and the earnings have shot up, and the outlook continues to shoot up. But now all of a sudden we have economic uncertainty, and so this is a reason to be afraid.
I was going to say, does that bode well for them because more people might turn to them, or on the flip side, people aren't going to pay back their loans, right?
We'll see, I think is the answer to that, yeah. I suspect that there's more noise in the economy than actual downside. Everybody's talking recession or inflation. We can't have both. And so I think that we're going to work out. So I suspect that from here going forward, Propel will do better. The analysts have the earnings growing over the next several years, but it is an aggressive stock. You're either going to make a lot of money or you're not, and it's not going to be. It's not a high quality dividend paying stock, but it is a well managed company. These guys have done a great job. The market is huge, and they penetrate only a small portion of it. So for an aggressive investor, yes, you could enter and hold that stock.
Got it. Okay, let's go to the phone lines. Judy's on the line from Barry's Bay in Ontario with a question. Hi, Judy.
Hi, I'm wondering about BCE. Should I hold or should I sell and buy something that's better?
Okay, thanks to your phone call. BCE, of course, a parent company under Bell Media of BNN Bloomberg Channel and CTV News, which the stock has gone, now slid sort of under $30 at one point, coming back up today. What's your long-term look? I'm going to take a longer-term look at BCE because I don't think it's going to move in the interim period for a while.
Well, I'd just like to initially say hello to Judy. My cottage is on Allen Lake, which is right beside Barry's Bay, and we go shopping in Barry's Bay for our groceries and gas.
So she can talk to you at any time, but she wants
exactly. Well, anyway. So BCE, BCE is troubled. I mean, the telephone business is becoming more and more competitive. The communications business is becoming more and more competitive for my entire career.
Yeah, decades.
And the BCE is now operating in a spot where they can't cover the dividend. They are on a massive fiber build, which they have said over 3 years will, the capital expenditures are going to drop, and then they'll be able to have the capital to cover the dividend. Most investors do not believe that, and we're in a very negative environment. But at $30 with a 12% yield, I think if they cut the dividend in half, the stock would go up, and you'd still have.
And there's discussion about that,
and
right?
you'd still have a nice yield. So I'm comfortable holding BCE.
Would you buy into it at this point, though?
We have had vote. I cannot get a vote to buy BCE on my team.
Okay.
I'll leave it at that. They would.
So if you have it, hold it.
Yeah. Well, I may be actually a little more. I'm a more aggressive investor maybe than the rest of my team, so I would say I would actually speculatively buy it.
Got it. Okay.
Because I think it's it's not going away.
Okay, let's go back to the phone lines. Robert is on the line from Brantford, Ontario. Hi, Robert.
Good afternoon. Bruce, I'd like to get your take on Well Health Technologies. I've been buying it over the last couple of years. 2 months ago, I sold it at about $6.30, half my position. Now it's below $4, so I'm buying it back like crazy, and I can't understand why it's so cheap. The CEO said they're going to make it more acquisitions this year, next year. They've got that spin-off coming, which is going to add a tremendous amount of value. Everything looks good, and yet the stock just seems so cheap. Can you maybe add to that why it is? Thank you. Bye.
What's going on with Well Health?
Sure. This is fun. Brantford, Ontario. I swam
You have history everywhere.
I swam every morning in Brantford Y for
geez.
25 years on the Brantford Y swim team. I grew up in Paris, Ontario, real close to Brantford. Anyway, so Well Health is a stock that, they're consolidating doctors' offices, and they have a formula that they go in and do it.
Do they do the backroom, or do they do the backroom administrative work?
Yeah,
right?
they do the backroom,
Okay.
and there's a dental company doing the same thing. And I mean, I think we're in a market where small cap companies that need capital expenditures are just not doing well. I mean, there's fear everywhere, and people are just selling, and they're not looking at the underlying businesses or understanding why. And these stocks are in ETFs that are being liquidated, and it's just more it's the overall macro environment, not the micro environment. And so, Well Health, we own the Dentalcorp, which is a similar idea, and I think they're both going to work out slowly over time, but they're slow stories. You're buying a dental practice, you're paying 6 or 8 times for it, and you're going to get an 8 to 10% return on that. And the market's wants NVIDIA where you're going to get a 70% return, this sort of thing. So that's what's going on there.
We just pulled up Dentalcorp as well, which is at almost
same
$7.90.
idea. Yeah. So we've been accumulating Dentalcorp as well in our little Canadian equity portfolios.
So it's a longer-term investment. You want to take this, you want to hold it for a while.
Yeah, it's slow and steady. It's going to work out just fine if you hold it for 5 years.
Got it. Okay, let's get back to the phone line. Sal's on the line from Toronto. Hi, Sal.
Hi there. Yeah, my question's on BlackRock. I was interested to know if this would be a good time to enter into a position in BlackRock, and then as it is a good dividend payer. And I was also wondering, there was a report out by the Globe earlier this week about a proposed Republican tax change which could affect Canadians who hold U.S. securities that pay dividends, like BlackRock. So I was wanting to see, if you've assessed the risk of holding U.S. equities if these kinds of proposed tax changes come into effect for Canadians. Thanks so much.
Good question, because we know sometimes these things get floated, and within no time, Donald Trump has signed off on an executive order.
What can I say?
I know. We don't know what we don't know.
Right now, there's a 15% withholding tax on U.S. dividends. It's negotiated through international trade and everything like that. And
are you concerned about this?
It's not the top of my list.
Okay.
Okay. Because we do our investing in our fund, and that is a Canadian registered entity, so we don't have to report all the U.S. holdings to our clients. Don't have to report the U.S. holdings to the U.S.
To the U.S. officials.
Yeah, and I mean, if he could raise it to 25% next week on a whim, and then cut it back to 10% 3 weeks later. So I can't answer that. I don't think anybody in the face of the earth can. Okay. So, yeah.
Can you talk about BlackRock?
So BlackRock's a wonderful company. They started the ETFs and mutual fund world, and they're the largest player in the game. Markets will come back. Markets will grow. BlackRock will grow. It's well managed,
And you think it's just getting dragged down like everything else is getting dragged down right now?
It's a great long-term investment, yeah.
Got it. Okay, let's go back to the phone lines. We have Nazar on the line from Scarborough. Hi, Nazar, what's your question today?
Hi, Marilla. Hi, Bruce.
Hi.
May I have your thoughts on Air Canada, please? It appears that airline industry as a whole, both in U.S. and Canada, is in a slump. Canadians have become particularly deeply averse to traveling to the U.S. I believe you hold Air Canada. Do you still see Air Canada recover in the next 6 months? Thanks for taking my call.
Thanks, Nazar. So Air Canada down now to $13.94. Yep. I have 98. And this is far lower than it was during the pandemic.
Can they put up like a 10-year chart for me?
Sure, let's have a look at the 10-year chart. What do you still hold Air Canada?
Yeah, I think Air Canada is outstanding, high risk opportunity. You saw the stock spike back, coming out of the pandemic.
Yes.
Before the pandemic, this was a $40 stock.
I remember.
Let's say they had $8 of losses over that time period. Should be a $32 stock. It's a $15 stock. Yes, traffic to the U.S. is down. Traffic, you've seen some of the American Airlines report. Traffic is down, but our revenue's up because the people that are traveling want to be in executive class and luxury, and our average ticket price is way up. And I think Air Canada can divert these passengers to the, I'm going to go to Europe this summer, not to...
You're going to travel. You're just not going to travel to the U.S.
And Air Canada's going to make more money out of me going to Europe than going to Nashville or someplace.
But recessionary concerns, people are not going to spend as much. Consumer sentiment is down. Wouldn't travel sentiment also be down?
Yeah, it might, but with what he's done under USMCA, there's not going to be a lot of impact on the Canadian. There's more noise and political stuff going on. I mean, the expenses that I'm seeing are the counter tariffs on that Trump. We look to buy some furniture. Well, there's a 25% tariff on it coming into Canada because of Carney. I mean, why has he done that? There's nothing. So it's just a political noise to, hey, I'm fighting back for Canada. He's not actually helping Canada in that. And so, I'm going to wait till that tariff comes off, because it will eventually in these negotiations. So I'm delaying that. But flying to Europe, there's no tariffs on, and the income I didn't spend on furniture will be available to travel to Europe.
To spend money in Europe. All right. We're going to take a quick break. When we come back, we'll take a look at Bruce's past picks. That's coming up next. Back. Bruce Murray is with us today. We're going to take a look at his past picks from March 19th of 2024. At the time, he recommended Alphabet, which is Google, of course, on the NASDAQ. It was $147.92 American. It has gone up to $152.53 at this point, and consider it's been dragged down with everything else for the past couple of months. So a 3% return at this point, a total return of 4%. Would you still buy into Alphabet at this point?
It's our largest holding.
Okay.
We've never seen companies like Google, Meta, where the customer does all the work and you get the money. But what's it been hit on? Advertising, like we talked about Temu. I used to get a Temu ad every 5 minutes. And now, they're gone because of that. So there has been some hit to that, but they'll replace it. And Google's under some, every government in the world likes to criticize the successcul, so they're
looking at them as monopoly and what to do about it. Yeah.
But I just say that's a good housekeeping seal of approval. I mean, over my life, Microsoft was after IBM when I first entered the business in the 70s, and so, it's just.
You don't think they'll be hurt by all of these lawsuits?
They could be, but it's minor, right? If they have to spin these businesses off, they're worth more spun off to the shareholder at the moment than's in the share price. So, so I think, the artificial intelligence is going to drive the world for the next 10 years. Bill Gates said most of us are going to be telling a robot to do our work in 10 years. And so the future is here. The companies that are involved in this process, and Microsoft and Meta we'll talk about later, Amazon, they're the people that
will benefit the most.
And they own the technology. They have the funds to build
to invest in it. Yes.
Yeah, the equipment. I mean, it's going to cost a lot of money, but these are the companies that have the cash flow to do it and have the skill to compete and program it. So I think, if you're a 10-year investor, Google's great.
Great. Let's go on to your next past pick from a year ago, AstraZeneca.
Yeah.
At the time, at $65.86 American, now $67.54. So a 3% return in that time, 5% total return.
AstraZeneca was the same story as Google, way up, and then they had AstraZeneca is one of the companies that's really solving cancer. There's, they made a lot of breakthroughs in cancer. They're getting drugs approved worldwide. Virtually every week I get an email saying, Japan approved it, China approved it, England approved it, something. And so we like the stock longer term. And then they did have one drug that failed recently, and then we're just in this malaise of sell your winners and go to cash. And so I think that's all that's happened here. And so AstraZeneca is a great story.
All right, and we'll get to your third pick from last year, which was Manulife. At the time, 32.83, now up to 40.03. So 22% return, total return of 27%. What have they been doing right over the last year?
So what Manulife did right was during the 2008 crisis, they had a lot of policies that were market tied, and they guaranteed them, and so it took a decade and a half to work those off. They've sold some, and the stock has finally recovered. We actually exited the stock just in December as it got to 45, and bought TD Bank and Power Corp, which were better. But we just think Manulife's the fine stock. You can see just in December how TD Bank and Power Corp were better buys. They've recovered, so we just traded out of it into that. These are dividend stocks. When one's got a 3.5% dividend, one's got a 5%, we'll do the switch.
Got it. Okay, we got to leave it there for this block. But Bruce Murray is sticking around to take more of your questions. We're back in a moment. Welcome back to Market Call. We want to get straight to your phone calls. John is on the line calling from Big Cedar, Ontario. Hi, John.
Hi there. I'd like Mr. Murray's opinion of Capital Power. It's off its highs and recently raised some equity. I'll hang up and listen to his answer.
Thank you.
Sure. John, thank you for the question. Capital Power actually is a very interesting story for us because Capital Power, in our mind, was one of the better dividend stocks in Canada. And we had we've had like a 6% position in our dividend fund. And then as you can see in the fall, the stock started to really move up we got a lot of excitement over data centers, and Alberta was going to be the center, and so the stock rocketed up. We took our position from that time period, like we had 6%, we took it down to about 3%.
Okay.
And rolled the money into Northland Power. When again, my dividend story, Capital Power went to 3%, Northland's still at 6%, so we did some switching. And but now Capital Power is back at the top end of our buying range. They made a major acquisition in the U.S. of just the other day. We're still doing our work on that, but my son Jamie tells me there's $1 of free cash flow in there, and that'll be $8 of earnings possibly, or $8 of capital value on it. So the stock, we could see it. So we're encouraged in Capital Power. We haven't done our homework. We haven't done all the analysis on it.
Yes.
But I suspect we'll be buying more, but at the right price, 44, 43, if it gets into that range.
Okay. Let's go back to an email then. This is from Carol. She says, hello, Mr. Murray. Would you please give us your thoughts on Doman Building Materials Group? Tell me about them.
So Doman Material Building Group is they really a supplier to Home Depots and stuff. They supply, and they're in Canada and in the U.S., and it's really lumber and stuff. And stock has a big fat, I think it's almost a 9% dividend yield. And, it's just gone down because of the recessionary fears.
I was going to say, do they supply steel or aluminum? It's quite a drop over the start of the year.
I mean,
construction in general.
Just construction, and they're largely they've got big operations in the southeast U.S., and so it's worldwide. And I'd say, again, it's just, we're going to put tariffs on Canada. Let's have some fear, and the stock's down. We own it. It's one of the big holdings in our income fund, and we're very happy with it.
But because of the exposure to the U.S., are you happy with it moving forward? Do you think it'll...
Well, I mean, housing. We need to build more houses in Canada and the U.S. This is, a supply base to that. They're well run, and so... I don't think it's a risky business at all.
You're happy holding it?
Yeah, exactly.
Okay. Let's go back to the phone lines then. Calling from Toronto is John. Hi, John.
Hi, how are you?
I'm good. What's your question today?
I had a question, for Bruce. I think a little over a year ago, Bruce, I was watching the program you were on, and one of your top picks was Major Drilling. And the funny thing was, I had just purchased that a position in it a couple of days before you were on, so I can't blame you for anything. No worries. And but I've been watching it, and it's pretty well. It went up a little, and then now it stayed flat.
Yeah.
And I'm thinking, this is the type of stock with the way the metal prices have soared.
Yeah.
This is the type of stock that really should be doing more. Am I looking at the wrong thing here?
That's the story I've had for 2 to 3 years, is that we know that we need copper around the world to fund this electrical business. Major drilling, so we bought it.
They're international?
Yeah, they're very international. They just took out the second largest drilling company, they're the largest exploration drilling company in the world, and they just bought the second largest.
Okay.
And it was in South America, Argentina. And Argentina is one of the places where, there's a lot of potential for exploration, drilling, et cetera. So this acquisition, with Argentina's change in government being more favorable to business, it's all great. And the other good thing that's happening is gold prices have gone up. Major Drilling is the company that the Canadian juniors would turn to do exploration drilling. And we're going to see funding come in for that. So world needs copper, gold prices are up, Major Drilling. They've just made a big acquisition. They've got lots. They're well.
It's lined up. It's lined up well.
It's lined up. In the stock, we're buying around 8. We had a $12 to $14 target price. It did get up in that range a bit. We sold some, and then it's come back down. And so we've been accumulating it here. It's a small company, and it's in mining. It's in Canada, and so all these things are negative for the global investor. But I think it's a great holding.
You would still hold on to it?
Yeah, we would hold on and buy more. Mm-hmm.
All right, let's go back to the phone lines. Michael is on the line. He's calling from Montreal. Hi, Michael.
Hi, Marla. Hi, Bruce. Bruce, may I have your opinion on Cenovus Energy overall as a company? With it currently being in the penalty box compared to its peers trading at depressed valuations, do you see a potential merger with one of the big Canadian companies, oil companies? Thank you very much.
All right, let's talk about Cenovus.
Yeah, well, Cenovus is a little bit unique in that I think they own some refineries in the U.S. and stuff like that. And so they were, the heavy oil being exported into the markets where where the use was, and it's just the price of energy coming down and heavy oil. The story of Trump wanting Canada was to do an LBO on our energy business, right? It's you're buying there's a Canadian discount, and then the stocks are cheap on top of that. So it's just the energy
down to 1686 today.
Yeah, and the story on energy is the price of oil, and these companies are all going to do better when the price goes up and worse when it goes down. And there's so many companies to choose from in Canada that what do you like?
I think a lot of people are waiting for an announcement from Trump, right? He came in strong saying energy, and we're going this way, but has been so preoccupied with the trade war that everybody's kind of hanging in the balance.
And then he puts a 10% tariff on us, right?
Yes.
Now it's okay because Canadian oil was more than 10% cheaper than US, so the tariff can be absorbed, and the Canadian companies not really be hurt on the price. But we need export pipelines, and is Carney the right guy? Carney's been he's been a green energy or green anti. He's a climate change guy, and so is he going to actually authorize the pipelines we need to, or is he going to continue to let Putin and Saudi Arabia get all the incremental business?
Yeah, we've been talking about this. There's a lot of pressure now, and it's much more popular than it was a number of years ago, right?
Yeah. I mean, if I got a degree in economics, one of the things you learn is terms of trade. Canada's terms of trade are determined by energy. We export more. The value of our exports is 40 to 60% energy. I don't know the exact number, but it dwarfs anything else. And so if we're going to make the country richer and get the standard of living higher, we've got to do something with energy. Like Trump Keystone Pipeline would allow more energy to get to the Gulf Coast to be exported, but we've got to export it from Canada. Like Energy East is $1,000 per person in Canada of GDP increase. Just 300,000 barrels of oil gets consumed in St. John, New Brunswick, where the largest oil refinery in Canada is, That's all being supplied by foreign oil with maybe a little bit from Newfoundland offshore. It's, it's staring us in the face as a great opportunity.
Yeah.
300,000 barrels a day, $80 a day, boom,
Yeah, we'll see what the next leader does about it since we're in the election period. All right, we have to take a quick break. We're going to be back with Bruce in a moment. Stay tuned. Welcome back. We have Bruce with us at the desk taking your questions today. We go right now to our first caller from Vancouver. Maurice is on the line. Hi, Maurice.
Hi, thanks for taking my call. Bruce, it's always a pleasure to see you on this program, and I agree entirely with what you had to say about the Donald. It seems that a day without controversy for him is not a day worth getting out of bed.
Mm-hmm. Exactly.
Anyways, I'd appreciate your opinion about Merck. Now, I wrote this stock way back from about $85 to about $110, and then I got out, and I never thought I'd see it around these levels. I want to know if you feel these levels have been reached due to some patents expiring, or has the company just reacted with the market downturn and has reached these levels of sub $80? And whether you think this is a good entry point, it's got a healthy yield, but whether you think it's a good entry point or we should wait longer. Thanks.
Okay, thanks for your question. So what is going on with Merck? Is it a patent situation?
Merck is a company we don't own, and we haven't done a lot of work on. But a decade ago, Merck unveiled Keytruda, which was a great cancer drug. And I know a lot of women who have actually are still alive because of Keytruda. And so, but the drug's now a decade old. You're starting to, other companies are coming. Cancer is being rapidly attacked by a lot of things, and there's other products coming out. We mentioned AstraZeneca's got a plethora of products.
So
and
just competition.
So I think there's competition, but I also think, maybe Merck got a little overexcited on, Keytruda was so successful that it got overexcited. Merck's one of the great companies, but like Pfizer, like AstraZeneca, these stocks have all come down. For what reason? I don't know. Maybe Trump's going to attack medical benefits. Like
Pharma is in the sphere for tariffs, right?
Yes. And so I think there's some of that going on. Merck is a great company. I'm sure you could repurchase it here, but we're going to talk about one
in your top picks.
Top picks that I think might be a little more exciting.
Got it. All right, let's get back to the phone lines. JJ is on the line from Edmonton. Hi, JJ. JJ, you still there? Okay. He was looking at an Exchange Income Corp.
Right. So Exchange Income Corp is a Winnipeg company, and they're extremely well managed. The entrepreneur who put the company together is one of these guys, if you invested with him when he was 20 years old, you'd probably wait till he passes and you'll make a lot of money. So Exchange Income Corp bought all the airlines that fly into the north, and so it's a lot of medical, just flying food.
Supplies.
Supplies. Okay. And it's a great business, and they've also made some other acquisitions outside of that. They're in line to buy a company in Australia that there's two U.S. competitors, and them looking to are the last bidders on an Australian company. And like they do all of the rescue flying off Canada, and this company does the rescue, the search and rescue stuff off of Australia.
Is this their first venture outside of Canada?
No. Okay. No, it's not the first venture outside of Canada, but most of their airline assets are in Canada. They have some manufacturing businesses and stuff in the U.S., but so that's what the excitement about it is. We like the company. It's in our income fund. It's got everything we want. Great management, profitable businesses that are well protected, and opportunities to grow.
Got it. Okay, let's get back to our phone line, see if we can get Betty on the line. She is calling from Hamilton, Ontario. Hi, Betty.
Oh, hi, Marilla, and thank you for taking my call, Bruce.
Mm-hmm. You're welcome.
Would be interested in your thoughts about Oracle Corporation, since you mentioned, interest in the AI space.
Mm-hmm.
And I guess there's also some rumor about they may be in line to purchase TikTok. What are your thoughts about that? And if I could sneak in another question is, do you see any Canadian stocks in the AI space? Thank you.
Thanks for your question.
We'll start with Shopify is a Canadian stock that is going to be a major AI beneficiary. And Celestica is a manufacturing company that supplies, they don't supply the core of AI, but they supply the stuff around, like Google uses all Celestica equipment. So those are two. But we're talking about Oracle. So Oracle, Larry Ellison is one of the great entrepreneurs in computer technology. Oracle took over the corporate database business from IBM basically in the last 25 years. And with AI coming on now, you'll need big databases to feed this, so this is right up Oracle's alleyway. That's why the stock did well. The stock is sort of selling off because of just the general sell-off in Google and all this sort of stuff.
Start of the year, yep.
And could he buy TikTok? Obviously, yeah.
Yeah, okay. We'll leave it there. We're going to take a quick break. That's all the time we have for phone calls and emails. But when we come back, Bruce will share his top picks. That's coming up. Welcome back. Time now for Bruce Murray's new top picks. He starts with Meta at this time. Let's talk about Meta and what you see moving forward for Meta. They've got a lot of controversy surrounding them as well. They're getting challenged in court quite a bit.
Sure. Meta, like Google, has sold off massively. We believe these companies still are going to own the world. Meta does $160 billion of advertising. That's just on Instagram and Facebook, and the third world operates on WhatsApp. They have come up with ideas on WhatsApp where people in these countries can focus advertise for very low amounts, but there's so many billions of it that they could actually make $100 billion of revenue out of this. So, Mark Zuckerberg is proven to be one of the great
entrepreneurs,
internet entrepreneurs, and he had the guts. When he had to cut back, he cut back where some of the other ones are more generous. Anyway, so I just think it's a great opportunity. It's selling at 20 times earnings, which is unbelievable for a company that could grow 10 to 15% for the next decade. I haven't even seen the glasses that they have, but
they've put a lot of money into that. It doesn't seem to be sort of taken up, or in any way.
Well, not yet. But I know people that have them, and they're really going well. Yeah. Okay. So Meta's it's a big long-term story on AI.
Got it. Okay, let's get to your next pick, which is Eli Lilly, which today announced that they have successfully but the first part of a trial for its new diabetes weight loss pill, which is new.
Yeah. I should have been on yesterday to pick this stock. It's up $100 today.
Yeah.
Anyway, I think it's going to the target price is $1,100, and here you've got one of the they've got a plethora of ideas in they're part of the story on cancer. They've got new drugs, like the science technology is unleashing, the human genome, and they're figuring it out. And so we're getting these products just pouring out of these companies. And Lilly, is with the weight loss drug is in the lead. Their product works better. It's slightly better than Ozempic. And with the first to get a pill, the pill is the ultimate. That instead of getting a needle once a week, you can take a pill once a week or once a day. I just think that
they've got a lot of traction moving forward.
And the earnings are going to double in 3 years, and it's an expensive stock, but the earnings are going to double. And beyond 3 years, they've still got these other drugs that are in research that are just going to continue to feed it. So it's a core holding for
long term. Got it. Okay, let's go to your third pick, which is Linamar. Linamar, we were talking about, was initially exposed, right, as auto manufacturing trade war, and that has steadied. So you see some forward movement here.
Yeah, and I mean, my dad traded or bought stuff off Linamar when Frank Hassenfratz first came to Canada. Sure. So I've known the company for a long time. I was the analyst at Nesbitt when it came public, and I jumped on it. So I've known the company really well. This stock is a classic value stock. If they sold the company in just the assets, there's $100 of value just there. The company's buying back stock. they have making $10 a share of earnings, so you're selling at 4.5 times earnings, and the U.S. everything they make is under USMCA, and the one area they have is they have these very unique agricultural products for like the high-end farming specialized products for that. And if the United States does settle with China, it's going to be because China is forced to buy a lot more agricultural products. So agriculture is down right now, and that would be a turn, as well as the auto business is turning. And they make the class like nobody can make the stuff they make. They make the e-axle on the best Mercedes. Okay. They make
unique product.
Yeah, and nobody can touch them in machining.
Okay, we do have to leave it there on Linamar. Bruce, thanks for coming in. Good to see you. And we're going to take a quick look at the markets as we head out. Here's a look at the North American markets today. Thanks for joining us, and we'll see you again next week. We're off tomorrow.